room service, and he comes into the room with more champagne, and George is kind of lying naked with Miss Universe, and the wind goes, where did it all go? When did it all go wrong? When did it all start to go wrong? He's like, I don't know. Ladies and gentlemen, Acid Capitalists, the tribe. We are approaching, we've passed the midpoint in January, and I'm slowly climbing my way back. Bear with me. We got a show today. We got Keith McCullough. We got another tribe, the Hedgeye tribe. And we sat down and we just talked about the journey, and we talked about routine, and we talked about hen's teeth, in that it's rare, it's truly rare to find many intelligent people in your life. And so perhaps the big underwriting risk for this year is that we're investing too much confidence in the public authorities to engineer a safe landing. I hope you enjoy. I hope you follow us. I hope you if you like it, I hope you express that. I hope you reach out. Where are we? We're on podcast platforms, Apple, we're on Spotify, we're on YouTube, we're on Instagram, we're on Twitter. We're there. We're there for you. Thank you very much. Let's keep it real and have a chat about finance. I mean, what's happening? What's happening? What are you seeing? What's out there?
Yeah, where do you want to? What part of the world do you want to start? What market or what economy?
Well, I mean, there is only one economy. There's the hegemon, and everything else is the detail. I mean, everyone else is, needs the collateral of the U.S. government, And as we know, in the easier go-go times, the people who create fiat dollars, but fiat dollars outside the territory of the United States, sometimes they're like, we don't need US treasuries, we'll take Italian PTPs, we'll take Japanese reserve currency. What do we call it? What is QE? You create banking reserve. Give us your banking reserves, park it overnight, and we'll give you a line of credit, and you can then lend it to a Chinese property company. Good luck with that. I think we're still in that world, but and of course our Federal Reserve friends, and I think you, like me, we're going to be on our best. We're going to be as polite as we can. It's too easy to mock. It's too easy just to be prejudicial. We're going to recognize the task is considerable, and unfortunately, their track record is kind of miserable. We wish them well, but we suspect they're going to fail again. So all roads lead to here now, and of course, everyone starts the year feeling very forgiving. The world's going to be better. I'm saying too much, but I had to stop. I had to register. I had to record. The IMF has changed its outlook. It was concerned about 2023, but now it's like, we were concerned by the end of the year. We think there's going to be a party again. So, and it made me think. I'm sure. I hope certainly all your tribe. I'm sure they've seen that the move. It's a Swedish movie. Swedish movies. We have to watch more Swedish movies. They had Woody Harrelson in The Triangle of Sadness, and it's a political polemic. Well worth. Don't go to the theater seeking entertainment, but go to think. And it begins with a kind of a satire on male models, and they say Balenciaga. Balenciaga is a very expensive, bizarre, I think, Italian brand, and they employ kind of Roman-looking kids. And so when they say Balenciaga, you have to go and look ponderous and sad and concerned, and that would be the IMF's original outlook for 2023. And then you go H&M, and you go smiley face, and that's where the IMF now is. And of course, I suspect when it comes to February, March, we'll go back to Balenciaga, and we'll be ponderous, and we'll have misgivings. But anyway, there you go. Italian fashion, you take the lead.
Yeah, what's going to be interesting about that is that the numbers, like if we're right, I mean, we now cast 50 different countries. So, I mean, if I look at the U.S. setup, most people that are like, okay, it's going to be a soft landing. So, now we've all agreed to agree, now that we blew up our year in 2022, we're going to have ourselves a soft landing, because that's what would be ideal, I suppose, for them. The Fed can do what they do, and then things are going to land softly. So we don't agree with that. I mean, what's going to be interesting is that Q4 GDP, the way that it gets reported sequentially, is actually going to be up. So that's just going to fuel more of it's really okay. And then we actually have GDP at like down 2.9% for the first quarter, which is going to be by April. So I think like when you see the Fed doing and committing to doing what they're doing, they're basically tightening into what I call quad four, or into a hurricane. So you get the trifecta of GDP growth slowing to -3, inflation not slowing fast enough, the Fed staying with it, and entering a proper profit recession. So there's nothing on the profit recession, as you know, there's nothing soft about it. We're coming out of the mother of all bubbles. I mean, in terms of both profits and the margins embedded therein. So it's not that complicated, I think, to be a bear at this point, because I've been basically a year into it. And you have a lot of people who, I guess, got squeezed in the last week. You look at the U.S. market in particular, it was in the 99th percentile, man, like of 1 week short squeezes. So if you look at like Goldman's most short rolling basket, which they have a basket for fucking everything that they can get a brokered commission on, obviously, right now. But it would include like Bitcoin sensitive equities, profitless tech, meme stocks, whatever. That just had its biggest up week, 99th percentile on a 5-year look back. So now, the street comes into the year saying, okay, it's going to be a soft landing, and all my winners last year go down and all my losers go up. So they're a little, bass backwards right now. And I think the last, we're into only the third day of the resumption, I think, of the U.S. bear market. So we'll see how that goes for them.
Yeah, H&M. I think it's. I hesitate to say it's an easy market in that you just can't own equities. Period. But nothing is easy, and I think you describe the commercial temptations of commercial speculators. They're employed and they're engaged to be on it at all times, and to run their risk. And what we're seeing is just a change in calibration up and down. But it's. I think we should expand upon the expansion in GDP that's being reported. Because really that's a function of why the Fed's role is difficult. There had been an enormous inventory ordering cycle because there was a supply shock. The shock was that it was hard to procure, that you couldn't procure enough. And the thing that drives a retailer bat crazy is having empty shelves when people want to buy it, and so you order 2x, 3x, 4x, and now of course we're on the back end of that, and it's no longer a supply shock. It's just a shock. It's like, oh my god, stop, please do not send any more. And of course you're importing that stock, and as you import less, then that is the dynamic which gives you the expansion in the GDP, which I believe that your model was seeing. And people might not understand fully that dynamic initially, and that's what's happening. I've been saying, the TLT, the long end on the ETF, it's kind of fun in that it's not like it's gone back to 2018 or 2015 or 2013 when we had the taper tantrum. It's gone to like 2004. And it's just like, all the problems of the last, the depression since 2009. and so that's there are always opportunities. I think I'm sure you're like me that we bounce. I used to bounce out of bed. I don't know if I'm bouncing these days with other matters, but you bounce out of bed because there's a recognition there's always a bull market or a bear market starting somewhere, and it's determined by price dynamics. It's determined by this triangle of sadness or happiness, and so the TLT has this immense triangle of sadness, and I'm like, yeah, that's where I want to be.
Yeah, that's a good one. I mean, I haven't bought that yet. I've been, for me, it's because I have to deal with the triangle sadness that is, the Federal Reserve and all of its, they will do something at some point that I will absolutely not expect. But, the way I've gotten around this, like my biggest position is gold. And it's been quite a while since that's been the case. So, I mean, gold seemingly doesn't give a shit about, the pace of rate hikes or whatever. They're just getting on with the recession. So if you watch, I think it's basically the same trade, though. I mean, TLT from here and GLD from here, albeit, GLD's been better and TLT's, I think, just getting started is your point. Whereas, gold started in November, was really when it started to say, hey, look, I see this deepening recession. I see the Fed fucking it up. And as they screw it up and invert the yield curve further, this morning 10s, 2s in the U.S., as you know, it's like a bone-chilling minus 71, which is not, there wouldn't be any mosquitoes, in that place if you're sitting there. So, that, again, it portends to a deep and a deepening recession, i.e. -2 to -3% headline GDP reports. As you know, we haven't seen those in a long, long time in the U.S. So I think, might be right now, actually. Like if I look at my macro signal, what I look for in something big like the 10-year yield as a proxy for TLT, even though it's 20s, lower highs in a big cycle of interest rate moves. So that, like my signal would say, and the process would say that the 10-year yield peaked in October, and from there we're not going to see that for a very, very long time. And the reason why it peaked in October is because the data started slowing at a faster rate in November and December. So in those 2 months alone, Hugh, in the U.S., I mean, this is reported yesterday, industrial production growth went from 5% growth. To your point, there's a lot of inventory that procyclically kept that number high to 1.5. And in 2 to 3 months, it's going to be going towards 0. So you drop 500 basis points over a 3 to 4 month time span in one of the top rated features in a GDP model. It's the third ranked feature in our model. That's a shitload of slowdown. And going to visit Dr. Zero is a big difference than going from, 5 to 3 to 2 on GDP. Because very few people, you've done it, but very few people, last I checked, going back 25 years, have A, risk managed into a recession profitably, and B, stayed the course. And that part B is really the toughest part, as you know, in a bear market, because you get all these, everyone's trying to call bottoms. It's a stinky business picking these bottoms, and they continue to get just smoked. And to me, that's exactly what just happened here in the early part of January.
Yeah, for sure. It is bewildering, the naivety of investors, in that the sobering question is just, with the greatest of respect, can you tell me when the Federal Reserve last kind of really called it, or like really kind of last made Hail Mary pass, which worked out, because like you watch it, I watch it, we've watched it together for a long time. I can't, like maybe you go back to, was it 1994 when there was a preemptive hike by Greenspan? Even that had its tribulations with Orange County and the like. But a long time ago. I mean, that's a year ago. Trying to find a saving grace. Your comment on gold is interesting because, yeah, I mean, copper gets a good rap as being, the PhD master in economics because it's so engaged. It's an industrial metal, and therefore the price is kind of giving you a leading indicator for strength. Gold gets less of that rap, but really what you're saying is gold is reflecting the curvature of the treasury market, and it's saying that having taken a leveraged global economy and raised carry on it and actually taken real rates very positive, like to 2% real positive, the things break. And therefore gold is discounting a world where the remedy once more will be negative rates. So actually the movement in gold, I think what you're saying is a proclamation that negative real yields are going to feature again very prominently and where we're going to travel to the next year or so.
Yeah, very well put. I mean, when you take, never mind real yields, but when you take 100 basis points out of the nominal 10-year yield, which is essentially what I'm looking for here, from 425 at the peak in U.S. 10s in October to easily get it, you can get to 325 by next week. So that I do think that we're going to continue to see that. You see it. You'd also see, and this is where the Fed comes in, staying the course. It's not so much staying the course with rate hikes; it's when they're staying the course. It's generally, as you know, what people screw up in macro is that they start with the valuation of things or their narrative of things, but it's the particular that matters. It's the particular action by the particular central bank at the particular point in the cycle when it matters. And that's, it's more Mandelbrot, 101, which is, there's a lot of Brownian motion all the time, but there are particular points in the cycle where a central bank can really screw it up. People would argue that they're not screwing it up because they're going to keep fighting the fight on inflation, and I believe that. But I'm not here for, to be some kind of like some kind of a moral leader of the Federal Reserve. I'm just trying to get the market right. And in that scenario, you'd have a yield curve that's minus 100, minus 125 basis points inverted. I mean, like you always talk about collateral. I mean, you tell me who's got what collateral, and most importantly, who's got what liquidity in that situation. It's I think it's almost too obvious, like at this point, that is going to really, the Fed calls it Fed Operation Break Shit, or at least that's what I call it, FOBs. They're absolutely going to continue to break shit, and we've seen plenty of things from Blackstone's BREIT, funding problems to even Elon Musk himself. I mean, is he going to be able to make the next debt payment on Twitter's debt? I don't know. I mean, I don't care. I'm short Tesla, so it's fine.
Did I see that he cut prices by 20%?
Well, that must be a real demand signal to the positive side, huh?
Did I see yesterday or so that Microsoft are laying off 10,000 people? I mean, I don't think people are kind of inured. Like, you kind of get headlines about layoffs. I don't think people really understand the significance of substantial layoffs, in that it's the last thing you want to do as a corporation. It's really, really hard to get good work. And you go to great expense to hire people, and you're going to hang on as much as the last thing you want to do is get rid of 10,000 folk from the business. And you only do so when you're like, business is really, really tough.
And a lot of these companies have not had to, there's a reason why Steve Ballmer is not liked, because he took over Microsoft into a fucking recession. That's when Microsoft stock sucked, because the economy sucked and their profit picture sucked. And now you have this new guy that they put up on a pedestal as the greatest thing since sliced bread, I suppose. And even if you don't eat bread, I mean, it's just the same analog that all of a sudden this guy says he's such a great visionary that he's going to be some kind of an epic leader throughout the downturn. I mean, no. I mean, another way to think about your TLT, or being long duration, by the way, or gold for that matter, the way that these positions really step up is as the unemployment rate in the U.S. steps up. So I think of it quite simply, even though this isn't the way that it's going to work. If every 50 basis points that the unemployment rate starts to rise off its cyclical low is, another kicker for TLT and gold to take their next leg higher. I mean, this is how the cycle, of course, ends. The profit recession becomes deeper. You have to fire people. It's the last thing that you want to do if you're a growth company, to your point. But it happens 100% of the time. I don't know why people would be surprised with that, or look at that headline on Microsoft and say, I got to buy Microsoft today. It's a cost-cutting story. No, it's not.
I mean, I don't force. It's entertaining reading either the Financial Times or the Wall Street Journal. I mean, you have to read it.
You have to.
And I guess I've got a really good friend. And I say a really good friend, really intelligent friend. And he raised this issue. How many really intelligent people do you have in your life? Because we kind of demand, we expect, we anticipate, like people in positions of kind of power. Judge. I mean, I'm talking about my divorce. Judges, advocates, lawyers, hedge fund managers, Federal Reserve officials, your boss. We're cowered into thinking that they're in that position because they're really intelligent. But I mean, you tell me, how many really intelligent people do you have in your life? Take a moment, how many do you think?
Well, it depends on what we're talking about. I mean, my buddy from home, Luch, I grew up in a town in northern Ontario, 20 hours north of Toronto by car for anybody who's never been to Canada. My buddy Luch, who is a plumber, builder, he sent me a picture yesterday. He's like, look what I'm working on. And it's like this unbelievably disgusting bathroom covered with mold right by the can that he had to fix the sheetrock, which was completely... I'm like, now that is a smart person. And so I text him, I'm like, what are the odds of me being able to fix that? 0. He's like, he pings me back, he says, what are the odds of me being able to send out a short call on a stock? 0. It's like, so I think the definition, of course, is like, we'll start with that. But I mean, short selling to me, when we talk about, like, I don't think about it as much of intelligence because I'm not very bright. I mean, most people know this have heard it, but I mean, I had the lowest SAT score at Yale University. I mean, that's a pretty low grade. So I'm not the most intelligent, but when it comes to short selling, it's not about being smart. It's actually about the opposite. It's about being a practitioner with experience and understanding the game within the game. I mean, that's called being street smart as opposed to intelligent. On that count, Hugh, I'd say that the community that had become the fundamentalists on Wall Street, long short hedge fund managers, the list is very thin, and it's thinning in terms of the results that I saw last year on the short selling side.
And do you associate yourself on the? Is that your kind of superpower, the short selling, or that you're just focusing on that?
It's not my superpower, but I mean, it's like the one thing that I haven't royally screwed up, but which is everything else. I'm not divorced yet, so I haven't screwed that up yet. Albeit, on certain days she might beg to differ. But there's like, I mean, look, I mean. Lowest SAT score at Yale. I got fired by Carlyle in 2007 for being too bearish too early. I've screwed up plenty of longs as far as the eye can see. But on the short side, I've never missed calling recession or market crash in 23 years. So I'd like to think of that. I don't know if that's my as secret sauce or it's anything to brag about. It's kind of embarrassing, actually. Most people would say if that's the only thing I'm good at.
Oh, humble me. I'm going to go with Balenciaga. Yeah. Well, I was going to say that I can think of perhaps no more than like 2 fabulously intelligent people in my life. I want to say that really intelligent people are like hen's teeth. They're very rare. We assume intelligence, and perhaps one of the great underwriting risks this year. One of the great underwriting risks when there's a cyclical threat that you're on top of is that people are placated by the notion that the people in power are intelligent. But actually, when you rewind your life and you say, how many intelligent people are in my life? And you result in like really single digit, and you go, well, actually, what are the chances that these bozos are intelligent? And that's when it gets icky. And that's where it's not reflected in models. I mean, consider the thing that always makes me expire is the ECB raised interest rates in the summer of 2008.
Yeah.
All right. The summer of 2000. Go back and think about that, And so we have to be cognizant that there will be further policy errors in the
yes. They're going to do it again. The guy said it today. I mean, the Dutch guy, I think his name is appropriately Not, like Gordian Knot. The Dutch central bank dude said, we're 100% going to do 50 basis points at a time for multiple meetings, which would mean that the ECB is going to do exactly the same thing in the summer of 2023. Because, hey, wait on it. The weather in Spain, it was 70 degrees in January. That's something you should straight line in your model because you're really intelligent.
Finance is astonishing. I want to believe that if you subscribe to a yachting magazine, let's say, that actually is written by people who understand marine technology and they're writing with authority and you can learn something. And maybe that translates to motorbike mechanics and all these other, and photography and the like. But when you read a financial publication, no sense. There was an uptick in Christmas retail sales apparently in the United Kingdom. God knows why, but and they have this old-fashioned retailer called Marks and Spencer's. Now, for 10 years, its sales have fallen year over year, but remarkably, the 2 weeks around Christmas, they had a good time, and buoyed by that, they're going to open 4 stores. And front page of the Financial Times, the death of internet sales. Amazon's finished, and now you've got to be opening retail again, and it's just like, oh my God, really? Where are the adults? Where are the parents? Because the kids are out of control with these publications. Anyway, so
by the way, if you don't mind me saying on that, tying this back to the Federal Reserve, I don't know if you saw this, but in his last press conference, when asked, what do you do? Like, what is your process? Like, what do you do in the morning? Some bloke asked Powell that question. Pretty interesting answer. He said he likes to get up, have his coffee, and read the papers. That's his North Star. Like, okay, so you're saying there's a chance that this lawyer is going to nail it. I mean, come on.
Yeah. And he's now saying, yeah, the internet's over. We've got to be opening high street retail outlets of the future again. Let me put that back on you. What is your routine? I'm imagining you wake up as well. I'm imagining you get out of bed. Like, what happens next?
Oh boy! I mean, you really want to know?
Yeah.
Okay.
Lay it down.
I mean, I'm not the smartest, but I'm definitely one of the more disciplined with this. So just bear with me. I mean, every single morning I get up at 4:30 in the morning, East Coast time. I get up, coffee's on. My dog and I go get the first coffee, right to the desk. First thing that I do, I turn on all my screens that my analysts have loaded, all the data, all the rate of change data. So go through all the rate of change data that's been reported either overnight or from the prior day. And through every single line item of every single major market that we trade and or have an opinion on, or that I trade personally. So I go through all that. By 6 o'clock, I'm tweeting about what I'm seeing. So I'll give some kind of kernels of my own senselessness or whatever people think I'm ranting about in the morning. So you can kind of observe me in my ecosystem. And then at 6 o'clock, I start writing 600 to 800 word essay, as I would. It's called the early look, or my daily strategy note. That is a summary of everything that I just went through. But I quite literally don't read. I don't read the papers. I mean, I don't even have papers. I don't read any articles. The only thing that I would read, I have a contra stream that we built for both people on Twitter that are saying bullshit and headlines in the media. So they're like behavioral contra streams. So I'll know what the headline will say on Bloomberg.com or Fox or CNBC or the FT. And that's just more for behavioral observations. But I never, by the time the market opens, I've not read one bloody thing that is written by anybody on Wall Street. All I read is the numbers.
I have a lot of respect for that. What am I doing wrong?
Come on.
Well, okay. I mean, it's a bit like that. The footballer George Best from the the gifted footballer from the 1960s, early 70s, played for Manchester United, profoundly gifted. But he did like champagne, and he was remarkably prolific with the ladies. And there's a famous story where the waiter, room service, and he comes into the room with more champagne, and George is kind of lying naked with Miss Universe, and the waiter goes, where did it all go? When did it all go wrong? When did it all start to go wrong? He's like, I don't know. But I mean, I get up at 6:30 and my mind's a mess, and I have to punish myself. I have to do exercise and typically listen to U2 or something running on a beach. And I just, words don't come easy. But words come easy for you. I mean, that's really, I mean, 600 words every morning is quite a feat.
Well, it's all about what you do, right? I mean, it's like my job, my entire being when it comes to Hedgeye and what we built here is producing that, right? Like if you were tasked with producing that, you would be able to produce that. I mean, it's what people do in life that they do. You know, it's just what I do. That's what you do. You don't have to do that every day. There's not, you know, I have thousands and thousands of people are waiting on that, so they depend on me to not fuck it up. You know, like so. You know, being prolific sexually or in bed is just not an option because I got to be up at 4:30, come hell or high water to do that, right? And again, I always say that no matter how many things I screw up or get right, the thing I know I can do is do that. Like I can do that every single day. I can do it deliberately with discipline, and it's in doing that. Like if you really study it, I mean, this is essentially, you know, the kernel inside of all of fractal math, or if you think about anything in terms of markets and nonlinearity, it's that if you're doing something deliberately every single day, wherever you go and whatever you listen to, what you're doing from 6:30 on, if you do that every single day, and there are like 50,000 mosquitoes in a spot that weren't the day before, you're going to notice that, right? Like so. When I saw the BOJ, like when I saw that, you know, the 10-year yield jump above, you know, 0.5% at the same hour in the same morning, and I haven't seen that in 30 years, I'm like, oh, okay, here we go. You know, this is a real thing to trade. So I think that that's a real important thing. Like if you're going to be in the seat and accountable to as many people as I have to be every morning, then I owe them that. I owe them at least being in the seat and having the ability to notice the particular.
Maybe that's what I'm doing wrong, because I feel that I owe them my disdain. You know.
Oh man, we'd all love to be you.
And then I always insist on poetry. I am the rain, full of disdain. Notions and potions only add to my pain. Maybe I've got to stop doing rhyming couplets. But more seriously, not my concern, but the thing which fills me with credulity when I hear this amazing story about your endeavors is that I recall my children being younger and planting a seed in the garden, and we'd come out every morning, not at 4:30 in the morning, but let's say we got up at 4:30 in the morning. We had a cute little watering can, and we sprinkled it with water, right? And like you say, 50,000 mosquitoes or whatever, we were cognizant of the environment. And I think we maybe did that 6 mornings in a row. And then my daughter went, I'm out of here. Nothing's like, you're a joker, you're making this up. And of course, if it becomes like a sunflower and, you know, whatever. So, because not a lot, yes, you cite the precedent of the JGB and this 1 in 50 year type development, whatever. But that was a lucky morning. Most mornings you must wake up and go, Jesus, give me something.
Yeah, that is true. I mean, it's also consistent with, you know, you'll always see me lean on the shoulders of the giant that was Mandelbrot, or, you know, fractal geometry, or the nature of markets and Brownian motion, which is basically most of the time nothingness. But Wall Street gets paid to create somethingness. I mean, look at me. I mean, I'm writing these 600 words because people, for whatever reason, want to read what I say about it. But when it comes to the actual cycle, like when you just draw a basic sine curve and you say, where are we in the cycle? I mean, absolutely nothing is happening to the cycle when you're getting people are buying. We could talk about this if you want to. I mean, but this bubble in buying ODTE, like 0 days to expiration options, and like people just jamming things like into like quite literally these options are going to expire within 6.5 hours of the open every single day. There's never been so much noise. You have Twitter, you have the monkeys on CNBC, you have everybody reacting like everything is about something, when to your point, it's actually nothingness.
So, what nothingness did you record this morning? Tell me that. I want to know. I'm really engaged with this. What was it? What did you write? You went, send. Yeah, I like that.
Well, it was more yesterday intraday when, like, every day you look at one of the most basic Bloomberg screens that I'm watching, because this is a new development, like 50%, Hugh, of U.S. listed options that are trading expire in a day, on that day. If that sounds like a lot, obviously it is. You probably know that. But
what are we saying? We're saying that 50% of all the trading volume in options is taking place in options which expire on that day.
Yeah. Yeah, it's like a new phenomenon, and we know why. There are three major, there are only 3 dealers left: Citadel, Goldman, and Susquehanna. And there's there's some manipulation in there, and there's obviously, if you know where everybody else's book is, you might want to get something to go the other way. There's there's a lot to that. But what I noticed yesterday was, okay, market finally stops going up. U.S. equity market does, especially all these highly shorted baskets from Bitcoin to profitless tech and back again. And on the most active board, so lit options that are most actively traded, all those 0 days to expiration options went away. During the first part of the squeeze, day 1, 2, 3, and actually into day 4, in the top 10, they were all 0 to expiration options and SPYs, right? Then yesterday, all those went away. And then all of a sudden, it's like, oh, the Tesla options that expire on today moved into the top 10, a bunch of options, 3 days out. So to me, like, that was like, oh, okay, no more bully out there. Nobody's trying to get the market to a round. Don't forget that they're trying to get it to round numbers too. So, S&P 4000, that's an easy strike to get everybody to buy into. It's at the 200-day moving monkey, it's where you're going to have the commensurate reaction by the monkeys on CNBC. So, because they think that that's signal. Once again, it failed. So to me, that was like the thing, which was like, okay, now we're good. Yesterday at around 11 o'clock, saw that, and I was like, okay, let's hit the gas on the short side again and on with the day. So it took a while to see that, because that hadn't happened in a while.
And then, like, so pulling back, and I think it's worth emphasizing, because people get a big failure is the focus on the destination, like the recession or the Fed recanting, the Fed cutting rates and stuff. But really, it's the journey, and it seems like your endeavors are trying to keep people on the highway, but we're always coming off, we're always taking detours, the kids need to go visit the loo, the journey is difficult. What was the journey like for you personally? I mean, and for some people it's like, oh God, really, this is such a long time ago, but 2000, early 2007 into the Lehman thing by the end of 2008. What was that? Tell me what are the words that come into your mind when you think of your personal journey during that time?
Well, that was the best of times and the worst of times. So in 2007, coming into the year, I was made partner at Carlyle. Like, what could be better, right? 33 years old, just recently, married, and I'm like, wow, my first child's on the way. He ultimately was born in November the 2nd, 2007. So I'll get to the bad part in a second, but so I'm running my big, long, short book there, and I get bearish. I don't know why I would get bearish. Our whole credit team was blowing up. I mean, it's Lehman, everything's starting to happen, right? So I get bearish too early. I get fired on November 2nd of 2007 is when I got fired. So the worst of times, my son was born on November the 7th, 5 days later. Great, Wall Street's great in that regard, get sent home with a box with my shoes in it and everything else. So that my journey really, started, and I'd highly recommend it for anybody. Getting fired is absolutely awesome, because it really puts you, when you talk about your journey, or put me in a place to really question, why the fuck am I working for these people? Like, I'm just going to work for myself.
Severe, but you've been made partner, you turned bearish. Clearly, you dropped a bit of a bundle, and then they're like, "Get out of here!" Like, really?
Yeah. Well, I mean, to be clear, the credit guys, it's pretty high profile. You probably remember it because it was listed in London. Carlisle CCC was the ticker, and our credit guys literally lost all the money. We're talking. I was down less than 4%. To be clear, I wasn't like for me that was not good. But they blew out of the whole thing. I was just one of the first people to get canned, or my whole team. I had to go around, tell them all, pack a box, you're out of here. It's terrible. But it's a formative moment, for me, where I'm like, okay, first child on the way, I'm married. I'm not gonna be hostage to some bozo anymore. I mean, I'm gonna live or die by the views that I have and the positions I take. And that for me has been the most important part of the journey, was just saying, fuck it, I'm not going to get paid for 2 years. I'm going to take everything I've my little pile, and I'm going to invest it into my own company. And that's 15 years later, that's where I'm at.
So you set up the company. That's what you did. You set up the advisory business, whatever.
Yeah. Right then, I mean, it took me like literally, when you have your, I don't know if this is how you experienced it, but my journey, like I've been fortunate and blessed to have 4 children. My wife and I, Laura and I. And Jack, our first
sex. You have a lot of sex.
I used to tons. I mean, it's a younger man's thing, right? I mean, before you have never mind your pile, before you have your tribe. But it's a moment in your life, particularly when you have the first one, where there's a lot of reflection and what am I doing here? Up until that point, I essentially spent my whole career as a hedge fund person. An analyst and then a PM and all that. It's tough. It's not a life I wish on everybody. It's brutal.
No, dude. It's funny because the ages rhyme with my experience. I remember launching my hedge fund in 2002 and walking in this garden in Lugano in north of Italy on the border with Switzerland with this endearing, incredible person who had been the seed investor with Soros, and I was 32, and he was saying, "Gee, my only concern is your age, 32," and he was lamenting that George Soros had been 40, and it was that kind of Taleb thing where in the first book where he goes on about the invention of life assurance in Renaissance Italy. And where they would insure a 50-year-old, but not a 21-year-old. And at first blush, you go, that's kind of weird. But actually, the logic and the great sense of it is, if you'd survived 14th century, whatever it is, 15th century, Italy, Naples or whatever, and you reach the age of 50, you're a good bet. You're good form, good precedent. And I'm sure you're like me. We're data guys. We like observations. We look at lots of observations. When people present charts and like a stock price chart, and it's 3 months or 6 months, I'm like, get over here. Give me data. And that was his point. The kid, 32 is kind of like 32, 33. You're still a kid. There's a lot of life, there's a lot of babies still to be created, and there's a lot of mistakes to be, to survive,
Yes.
And then that gives you the sensibility to be a risk underwriter. And that stuck in my mind. And he said, and you speak, and you talk too well. I mean, I was like, and he was right. I mean, if I could have invested in with the same acumen as the way I entertain as a blinking idiot on these channels, then life would be different. But anyway, there you go.
No, it's definitely a game where, and it's just the history of the game. I mean, you get too much responsibility at too young of an age, which officially puts you on the rail to have an education, which is losing a lot of money. And then you either get to do it again and again and again, or you do it in a different way. And I'd say that for me, because I trade my own book and that's it. I don't run anyone else's money. It keeps me plenty busy, and people either do what I'm doing or not, but there's 100% transparency on what I'm doing and when. And being this way where I can't get fired, technically, I mean, I can just think and execute and stay with these longer term cycles. That's helped me a lot. It's also helped me a lot to get a lot of feedback immediately. Like that, I don't know about you, but for me, when I was in my old seat, nobody's really going to give you edge on the buy side because that's their edge, right? So you're not getting real feedback. You're getting sell side bullshit, which is perpetuating bullshit in your mind if you let it, or allow it to. But in this seat, Hugh, I have all buy-siders, pension funds, mutual funds, asset allocators, short-term traders, intermediate-term investors, all pushing back at me, telling me where I'm wrong all day long, with a genuine hope that I take their side of the trade. And that is the most important thing that I got in putting myself into this kind of a format, as opposed to a traditional hedge fund format. I mean, I run my own hedge fund for myself, for my family. That's how we lived and how we created Hedgeye. But that's the most important feedback that I get, because what better than an open and honest pipe of people telling you how wrong you're going to be?
Absolutely. So let me ask that question about mistakes, because it's a risk business. How do you identify mistakes? How do you know you're kind of wrong? What's your procedure there? Let's answer that question first now.
Well, I always go back to my process and my framework. So I use this 2x2 model of the world using GDP growth and inflation. So we call that the quads. So there are 4 economic outcomes. They're all back tested against all of macro. So I have my signal and I have my economic outcome. So my projection on what the world's going to be changes every day with new data. Where I know I'm going to be wrong is when the signal consistently starts saying the opposite of what my position is. So again, let's say I'm positioned, well, right now I'm positioned for quad 4. Disinflation, it can be deflation, the rate of change of growth and profits slow at the same time. So I'm positioned for that. Now, if gold were to start to break down and bond yields were to start to break out on the upside as opposed to doing the opposite of that, then I would say, oh shit, the economy has bottomed. It's all priced in. We're going into quad 1. That's an economic expansion. The slowdown is over. So for me, I wasn't always that way. I mean, being royally wrong is waking up at some point in early 2000s when I was short Reebok and I was in Bandon Dunes after smoking 2 cigars in one night, which can really do a number on a young man. And my boss gets the lady from the front desk to wake me up in my room saying, I need this guy on the phone. It's like rotary phones back then. And he's just yelling because I'm short Reebok and it's getting taken out. And I'm like, wow, like, holy shit, I just lost the firm like $40 million. And that's a mistake. That's different than now, like, where is the process telling you you're about to make a mistake, you're in the middle of a mistake, and it's incumbent upon me to change my position. It's very different trading, obviously, macro than trading Reebok. There are all sorts of mistakes, but for me, that's how I score it, and I try to stop myself out as soon as I've lost enough money to realizing that I'm in the wrong spot.
Well, that is the hard part, isn't it? So you've delineated essentially a reversal in the trend of the gold price, and higher yields on the treasury would be these 2 fulcrum points, which are going to challenge your quad view. But then what people don't really get is, but at the same time, you're charged with taking risk and you want to make money. You want this endeavor to be profitable, and so you have a quantum of risk. And the hard thing is where you put these stop losses don't work. Yeah. So, but I guess, so can you say, like, in that example, you must have levels where you will begin to start. So for instance, the risk position, is it max? Do you have the potential to add to that? Or is this a point where if prices start going against you, your first reaction is going to be to come back?
No, I rarely go to my max unless if something's working, it's rarely at the low end of my range. So I have what I call my daily risk ranges across all things macro. If gold gets to the low end of the range, I'll go to my max. I'll take that to a 12% position. It just hasn't gotten there. So I'm constantly, selling on up days, trying to get back, buy that back on a down day. So I'm screwing around with it that way. But, I'm riding my long position. On the stop losses, you're right. Especially if you're using short-term stop losses, you're going to be you're going to have a short life as a hedge fund manager or doing what I do publicly, showing it. So what I've built is basically what I call a multi-factor, multi-duration model. So multi-factor means I'm not just looking at the 10-year yield gold to confirm or deny what quad we're in. I actually have 27 core factors in that model, which include things like copper, 10s-2 spread, things you'd be well familiar with. But on the multi-duration side, you spoke to this, which is I have 3 different specific durations that I'm looking at. Immediate term trades, which are 3 weeks or less, trends, which are 3 months or more, which captures the quarterly flow of it all, and then long-term tails, which again, I never look at something on a 3 week to 3 month basis. That'd be a certified day trading monkey, right? I mean, not that those people aren't good at what they do, or they probably aren't called monkeys, but how would I know where I'm at in the cycle if I don't automatically at least have a 5 to 10 year look back staring me in the face on where the cycle is, and could I be capitulating right at the wrong spot? That's why I use those durations to keep me in it, as opposed to constantly stopping myself out. I actually rarely stop myself out. If I stop myself out, it's going to be, most of the time it's because the cycle's changing, so I need to change my position.
Okay. And I'm very conscious of your time and you have all of these activities. So maybe if we could end. So what you mentioned waking up very early and seeing the JGB yield post the 0.5 level and stuff. Where are you? What's your? I don't know where I am with that, to be honest. I really don't. Me neither. Because I am not. I still don't. Inflation is a monetary phenomenon, and which is to say that when you have a supply shock and prices are higher, unless money is being created, unless that's happening, then wallets are going to feel pressure, and it's discretionary spending that's going to be reined in, which is to say the quantum of money will react, it will contract, unless there's more money being created by the credit system. And that is not the case. It's not the case globally today. So no. I'm dismissive of the inflation thesis. And so the idea that Japan and the bonds blow up here, I'm in the teeth of it. When I look at the yen, and I said to you, I like lots of observations. The long-term chart for the yen is saying that thing could blow to being very weak. So I'm undecided. You don't have to be decided at all times. And I'm going through it. But maybe you could help me. Have you reached a firmer conclusion?
Yeah, I think that's if there's a pros point that was just made in this conversation, it's that, a position is having no position most of the time. So again, because you're constantly, every day, you get something that may or may not get you closer to having a position, or just staying with look, I don't know. I try to walk people through this every day, by the way, because I have to. The most recent analog I've used is that the Japanese are trying to keep, they've caught, the raccoon's been caught in the garbage can. And think of the lid of the garbage can as the whatever lid they put on the 10-year yield. In this case, now it's 50 basis points. So anybody knows that if you let the raccoon out of the garbage can and you're standing right in front of it and he's been in there all night, it's not going to be a good situation. It won't be a good situation for the Japanese if it were to bust a move. Let's call the lid 0.50. If it goes to 0.60 or 0.70, they've spent they've spent multiple decades keeping the raccoon in that can. That's a prisoner of war that's never been able to leave. That to me is, I actually believe I believe that the Japanese are as committed as anyone in human history to printing as much as they possibly can and buying every last Japanese government bond to the end of time, whenever time decides it. So that's what makes it a conundrum, or at least a no position for me from here. I could see that before, where they lost yield curve control or whatever, that was an asymmetric trade because they're pretty cheap optionality to get that move to 50 basis points. But from here, I'm not taking a position in that because I really don't have any edge on that. I don't know anybody who's close to Kuroda. I assume other people do. Kuroda is going to be gone in 4 months, of course. So we'll have to see who the new guy is. But why would they give up on this? I don't know why they would give up on this. I mean, and really anybody who had that position on this week, Hugh, really got smoked. I mean, they came into it thinking, okay, I'm going to stay short yen, I'm going to stay short JGBs, and what happened? That's a pretty big move if you have a lot of leverage on, right? I mean, that's why the JGB 10-year went from 50 basis points to 36 basis points in 24 hours, which if you have a big leverage trade on and you're at Citadel or a big shop, that's not a good day.
And it's not that you're irresponsible with a big leverage position. It's a function of the volatility. The price moves are typically very small, and to be in it to win it, you kind of have to have leverage to reflect that.
Yes.
But your answer, thank you for that, because it helped. It helps me because it always helps me because when I hear people say things which I disagree with, I'm like, okay, now I'm back. So my point, my return to you, and thank you for your eloquence, is yield curve control and quantitative easing and central banks. I don't think Kuroda-san has been keeping the raccoon in the bin with the lid with the control. The problem is central banks are pro-cyclical. Like,
yeah.
There's no damn inflation in Japan. It's a fucked up situation, right? And so it's like, if there was no yield control, where would the yield be? Actually, it would be where the yield is. Like, so take off the yield control. Like, Kuroda-san's like, you know what? Oh, like we were dumb. Like, you're right. We're sorry. You know, we're not going to do yield control. And give it like 3 months, and for sure, for 3 months, there'd be explosive volatility, price volatility, be all over the place. But at the end, what is it going to trade at 200 or 300 basis points? The 10-year JGB? I don't think so.
No. That's right.
It's a bit like, if the Chinese were not controlling the renminbi, so if they said to all their citizens, you know what, liberalization of the finance account. If you want to put your money into dollars, euros, sterling, we're not going to stand against you, right? And so initially it'd be all over the place. There'd definitely be a lurch to doing stuff like that. But maybe 3 months is too short. Within 3 years, where would it be trading? Because to my mind, the renminbi, the yuan, should be trading kind of somewhere between 4 and 5. I fear it's going to trade closer to 9. Because of what their manipulation. But if you liberalize the thing, I think it would trade closer to kind of 4 or 5. So I think people, they forget the pro-cyclicality. Again, they forget that Kuroda-san is, I don't mind that I don't know. I don't mind that I'm not having egg noodles, or I guess he would take egg noodles. Eels, fried eel or something, and sake. I don't mind, because you know what? I think I'd be pretty underwhelmed. I'd be pretty underwhelmed if I would be with Jay Powell. I'd be like, really? That's how we're making the decision. Like you said, I wake up in the morning, I read the newspaper, I take a coffee. I'm like, that's it. That goes a long way to explaining why we're all busted.
Yeah,
anyway.
That's great. I mean, I now that you say it that way, I mean, it depends on what we're defining as the raccoon. I mean, the Japanese they've had a pet raccoon. He sleeps in the garbage can. You feed him, he's never coming out. He's very happy because there's no growth and no inflation ever. It's totally screwed up. I think the way that the hedge fund community thinks is that it's this rabid UK type 40-year inflation breakout. That's what I mean by raccoon. This thing's coming out, and I agree with that 100% too. Like, and why is it, Hugh, that nobody that you know or I know, because there's nobody who exists, is well known as all of global macro's JGB bond king? Because nobody's been long Japanese government bonds, because they always start with valuation. This shouldn't happen. It couldn't happen. But if you just went with bloody well what you just said, which is this whole experiment didn't work, demographics worked, structural and secular growth slowing linked to that demographic curve, no inflation, you're right. Yeah, on the board, Japan would, because it's the oldest place on the earth, in terms of public markets that are trading without, the Chinese twist. You would have the lowest level of bond yields out of them all. I mean, you wouldn't need a lid or no lid. I still don't know why. Going back to your point on how many intelligent people do you know? Wouldn't that be an intelligent position to have had for 30 years, to be long Japanese government bonds?
And again, I think that's where we're going to end. We're going to end that there's just a paucity of intelligent people, that we imagine way more intelligent people being responsible for the affairs globally and economically. But when you actually get into the chambers of power, you discover that we've been over exaggerating the intelligence and the wisdom of those people. I always end. We discussed your superpower, your discipline to get up and to write and to tweak and to look at the quads and whatever. For me, I'm Johnny Drama, and I work on the basis that there ain't that many intelligent people. And I ask myself, why is it that intelligent folk screw up? Why are they not guaranteed to beat everyone else? Like you said, you had the lowest SAT figures and all these, humble me type stats that you rolled out. I mean, my father was a truck driver. I mean, how the hell I ended up in St. Paul's, I have no idea, right? But it's because life is capricious. Strange, weird things happen. And it's always, I've always charged myself the responsibility to conceive of the strange, weird thing that happens next. And my best efforts at that just now are that this kind of hegemon, the US dollar, and there's always this kind of bitching about, we got to take dollars, and then you get these guys who have wizard names like whatever that Credit Suisse monkey is, and he says, the dollar's busted, and we're going to go back to commodities as an exchange, all that nonsense. I think time-wise, we are very close to a financial revolution again. When I say financial revolution, I want to say the end of the 30s. We were on the end of the 20s, rather. We were on a gold standard, which was governing our economic behavior between nations, between continents, and it failed. It then led into Bretton Woods, which was really a holding pattern for what became the Eurodollar system. And the Eurodollar system, to my mind, is what we compare the gold standard with. And the Eurodollar system really came to the fore in the 70s, and it's had 50 years, and I think it's busted. And I think, if I'm right, the Fed's actions and the weakness in Asia, we talked about Japan, I do fear, because people talked about the inflationary consequences of quantitative easing. Wouldn't it be really quite fascinating? Because I've been very against that. I'm saying bank reserves. When I go to, I never go to Starbucks, but let's say I go to Starbucks and I say, "Can I have a flat white?" And they're like, "Yeah, sure." And I hand them bank reserves. Like, what's this? Get out of here. What's your name? Like, get out of here, you French guy. We take dollar bills, not bank reserves. But what if actually the Japanese and those commercial banks had taken all of their bank reserves and went to the Eurodollar window in New York and London and elsewhere and say, "Hey, what if we give you like a trillion to 10 trillion yen equivalent, of these bank reserves? Would you give us a line of credit?" And they said yes. And with that line of credit, you went long commercial risk into China. Japan is a conduit for all of that Chinese activity. And what if China's starting to kind of blow up? So I conceive of, I think the long-term dollar yen is saying the yen could be kind of toast, but it's only going to be toast if we have this dramatic catastrophe, which will then push them into that area. So drama requires you always to be looking for another absurd, profound escapade, and an escapade of errors of judgment. And then ultimately they're going to burn the system down. They're going to burn the system down.
Well, on that cheery note, I mean, you're still going to be in a good spot. It looks like there. I gotta.
There'll always be the surf. There'll always be mosquitoes, and there'll always be the surf. So yeah, I think that we'll end on notes of absurdity. I think that's the best place. May I salute you for being great company and intelligent company. You know, I can add you to my very short list of intelligent company. Thank you very much.
Well, you're going to be in trouble putting me up on that list, but I appreciate it. I appreciate it, and it's
give me the number of your plumber friend from back home. I need to speak to him.
Luch, he likes me. Yeah, he could help you with the mosquito problem. By the way, I can't. So thanks for having me. It's cool to have a conversation with you like this.
Thank you very much. Excellent. Okay, we're done. The tribes have met, and everyone is appreciative. So excellent. Thank you.